The stock market is going to rally on Wednesday, but the NASDAQ might get left out. The 8 mega-cap tech stocks might actually go down while the rest of the market has a massive rally. Let me explain what's going on. But first, I know I'm wearing my red shirt today, and I know historically, whenever I've worn a red shirt, the market's gone down the next day. I'm trying to break that horrible cycle by wearing a red shirt on a day the stock market should rally. See, here's what's happening on Wednesday. Wednesday morning at 8:30 a.m., or about 1 hour before the market opens, the Consumer Price Index, or CPI, inflation report for June is being released. And while the June report is expected to show a 0.3% month-over-month increase, the big headline here is going to be headline inflation. Headline inflation is expected to have dropped to 3.1%. Now, keep in mind that the Federal Reserve's target is 2%. So a drop from 9% at highs all the way down to just 3%, a mere 1% above the Fed's target range, should cause investors to become extremely bullish and could very easily trigger a massive stock market rally as people hope that the Fed is going to pause and stop raising rates now that inflation is very close to their 2% target. Now, what I'm talking about here is market psychology, not necessarily the fundamentals. The market psychology over the past at least 9 or 10 months has been that we ignore the Fed when they say they're going to raise rates, and we focus on the fact that this headline inflation number is coming down, while at the same time, the labor market remains fairly strong. And those two things combined indicate that the economy should be fairly strong, and in turn, earnings from companies should be strong, which is a good reason for stock prices to rise. But of course, that's all market psychology. The actual underlying fundamentals aren't nearly as good as the headline inflation will make them seem. Because the Federal Reserve doesn't focus on headline inflation, they focus on core inflation. And core CPI is expected to come in at 5%. Yes, it's slightly down from the 5.3% a month ago, but nowhere near the Fed's target of 2%. And that means that while the June CPI report is forecast to show slowing inflation overall, it's not going to slow nearly enough for the Federal Reserve to pause. Okay, they did pause last month, but I'm talking about actually stopping, like no more interest rates at all. The fact is, with core CPI still at 5%, the Fed is going to have to continue to raise interest rates. But I think the headline CPI coming in at 3% will be enough for the market to ignore the Fed or think that the Fed is lying and to go on this massive rally. I mean, why not? That's what the stock market has done for the last 10 months in a row. Why would anything change now, especially in July, which is historically the best month of the year for stocks? So for those reasons, I think really not so much for the actual economic reasons, because they're really not that great. I really just think for market psychology reasons, and because the market is so greedy right now, and the market is so bullish right now, I think that anything is going to cause the stock market to go up. And if CPI, headline CPI, comes in at 3%, that is just going to be music to investors' ears. And I really think we're going to see a massive rally on Wednesday. Now, to be clear, the economic fundamentals of the economy are not good, and they're getting worse. I talked about this in yesterday's video. Nobody wanted to watch it because nobody wants the truth. You just want to hear stocks are going up forever. Sounds great, and they will in a short term, absolutely. But at some point, the market's going to top out. So let me just briefly go over some of the economic news that came out today. And then I got to talk about why the NASDAQ might miss out on the rally on Wednesday. Getting into some of the economic news that came out on Tuesday, Microsoft has confirmed more job cuts on top of the 10,000 layoffs that they already announced in January. Now, layoffs and job cuts are bad for the economy. When people lose their jobs, that's not good. But for a company's bottom line, specifically talking about their earnings, it can be good. We saw quite a few companies last quarter report a decline in revenues, but an increase in profits. And the reason for that is the sales are going down, consumers are spending less, things are bad. But if a company can lay off workers, then their expenses go down. And if their expenses can go down by more than the revenues go down, that in turn means that their profits can go up. And that's what we saw with a lot of companies last quarter, is a decline in revenues due to a worsening economy, but an increase in profits because of all of the layoffs that they did. So what we really have to watch out for before we really start to feel good about this bull market continuing, we really need to see consumer demand come back. And it just so happens that Amazon's Prime Day is going to be the test for consumer demand that the market needs to see. Amazon is projecting new highs for this year's Prime Day, but analysts expect concerns about the economy to weigh on consumer demand. Amazon's Prime Day has been really bad over the past few years, increasing less than 10% each year, which is a significant decline from the more than 50% gains in revenue that they saw prior to the pandemic. The fact is, consumer demand just has not come back from the pandemic. And Amazon's Prime Day is going to hopefully give us a little bit of hope that things are turning around and consumer demand is coming back. Amazon's Prime Day is on Tuesday, July 11th and Wednesday, July 12th. Results of Amazon's Prime Day should come out either later this week or early next week. Now, let's talk about why the NASDAQ might actually miss out on this rally. Market heavyweights, specifically talking about the 8 mega cap tech stocks, are starting to dip ahead of a NASDAQ 100 rebalance. I'm going to go into more detail about what this NASDAQ 100 rebalance is in tomorrow's video. So make sure you stick around and watch tomorrow's video for a full explainer on this. But in the short term, you just need to know that the NASDAQ 100 is going through a rebalance in weightings, and that in turn is going to cause the 8 mega cap tech stocks to go down and have a little bit of a sell-off. The official rebalance amounts are going to be announced on July 14th here later this week. And I'm going to preview exactly what to expect and all of that in tomorrow's video. So make sure you watch tomorrow's video. If you haven't already, subscribe to the channel so you can get notified when the full explanation of the rebalance comes out. And if you got a lot out of this video, make sure you hit the like button and subscribe. Also, if you could be a good friend, just share this video on your social media pages so that others will know what's going on in the market as well. I hope you got a lot out of this video and hope you have a lot of success. If you didn't watch yesterday's video, you really need to know what's going on in the economy. Don't miss out. Don't cover your ears. Go watch it. Go find out. Go know the truth so that at least you can be knowledgeable and have a little bit of insight just in case the economy starts to actually affect the stock market, and just in case this massive bull run that we've been in starts to show a few signs of cracking and does come to a little bit of an end.